$31,000 signed and shaken on. Survey clean, sea trial done, deposit wired. And 9 days later that deal was dead, because a man in an office 2 states away typed one word about a sailboat he had never laid eyes on. Declined. That's not a bad sailboat, that's an uninsurable one. This happened in Rockland, Maine, up at the head of Penobscot Bay, where the granite breakwater runs the better part of a mile out to the lighthouse, and the yards along the harbor road stack hulls 3 deep every fall. She was a good-looking 38-footer up on stands with a shrink-wrap frame half-built over her. Aft cockpit, deep bilge, and her tall aluminum mast laid out in the rack alongside, every swage fitting on it gone the dull gray that stainless goes when nobody has put a hand on it in 25 years. The buyer saw a clean sailboat. The underwriter saw a rig with no birthday. And these days, the underwriter's opinion is the only one that gets her a slip. Here's what nobody tells you when you start shopping. There is a second gate on this whole business, and it sits behind the survey where you can't see it. The salesman with the financing brochure will happily tell you what a sailboat costs. He'll walk you through the payment, the volume below, the headroom, the swim platform, sail her home this season. He will never once tell you whether you'll be allowed to own her, because the marina wants proof of insurance before it rents you a slip. The lender wants it before it funds $1, and a growing number of carriers have quietly stopped writing the exact kind of sailing cruiser he's standing on. So today, 6 kinds of sailboat you can buy and can't insure. We start with the cheapest and finish with the one that costs a man his ocean. One of the 6 is a false alarm, and I'll tell you which one and how to clear it for a few $100s. Let's get into them. First, why this got hard so fast. Nobody announced it. The market just tightened. Boat US and Geico have turned down sailboats over 40 years old outright, and over 30 if they're longer than 40 feet, with no liability offered either. Allstate draws its line at 40 as well. Practical Sailor put the question to owners on both sides of the border and found the tipping point sitting around 40+ years at most companies, and as low as 15 at some. Meanwhile, a lot of carriers have simply stopped offering full coverage past 20 years, which is precisely where every affordable cruising sailboat in this country lives. And the rig is the trigger. Standing rigging is on a clock. Wire is generally considered finished somewhere between 10 and 15 years. A re-rig runs $6,000 to $10,000 on a 40-footer and past $15,000 on a 50, and some offshore carriers won't write a boat at all with wire older than 10. Your rigging doesn't have to be bad. It only has to be undated. Number 6 is the sailboat that's too cheap to insure. Go on any listing site this week and you'll find a Pearson 30 asking $12,500, an O'Day 34 at $15,000, a dozen honest little coastal cruisers priced under the cost of a used truck. Every one of them looks like the easiest yes in boating. And the underwriter says no, not because she's unsafe, but because the arithmetic doesn't work on his side of the desk. On a $12,500 sailboat, the premium is a few $100s a year. One hard grounding, one lightning strike, one November night pinned against a dock, and the repair bill passes what she's worth. Constructive total loss. He collects pennies and writes a check for the whole boat. So he doesn't play. What you're offered instead is liability only, or, if the survey came back with a list, a port risk policy, which is exactly what it sounds like. Coverage that lets her sit and doesn't let her sail. You bought a sailboat. They insured a dock ornament. And notice what did the killing there. It wasn't the year on the transom, it was the price. Number 5 is the 40-year-old classic plastic, and the trap folded into the seller's own policy. Take the Islander 36, Alan Gurney's design, built from 1973 through 1979. Thousands of good sailing hours in that hull. Clean ones ask from $34,900 up toward $70,000, and tired ones go for half that. She is also, right now, somewhere between 47 and 53 years old, which puts her on the wrong side of the line at several of the biggest names in marine insurance. Here's the part that catches people flat-footed. The seller has coverage. He'll tell you so, and he isn't lying. He's had the same policy for 18 years. But that policy is grandfathered, tied to his name, and an unbroken payment record, and the day the sailboat changes hands, it evaporates. His insurance tells you nothing whatsoever about yours. So ask the sharper question. Not whether she's insured. Who wrote it? In what year? And would that company write it today for you at your address? Number 4 is the 50-footer carrying 2 strikes. This is the one that looks like the deal of the decade. A Gulfstar 50 out of 1977, center cockpit ketch, 3 staterooms, a sailboat that cost serious money when Vince Lazaro was building them, starts around $35,000 on the brokerage today. 50 feet, for pickup truck money. And there's your reason. Over 40 feet and over 30 years old is the double disqualifier, the exact combination the standard carriers wrote out of their books first. Age alone they'll argue about. Age plus length they won't discuss. And every bill scales against you at the same moment. A pre-purchase survey is quoted by the foot, so the 50 costs you half again what a 34 does, and a sailboat wants a separate rigging survey on top of that. Re-rig that ketch and you're past $15,000 before she's wet. Bigger invoices, smaller pool of people willing to insure the result. Ask yourself why the last owner let 50 feet go for the price of a truck. He knows. He's been making the calls. Number 3 is the false alarm I promised you, the sailboat whose rig has no paperwork. This is the single most common reason a policy comes back declined on a genuinely good boat, and it's also the cheapest thing on this list to fix. The underwriter is not telling you the wire is bad. He's telling you that nobody in the chain can say how old it is. Undated is the whole problem. So he asks for one of 2 things. Proof the standing rigging is under 10 years old, or a written inspection from a professional rigger. That rigger's report runs $300 to $500. $300 turns a no into a yes on a sailboat you were 10 minutes from walking away from. I delivered a 42-footer down the coast one November, whose owner couldn't tell me the age of a single wire on her. Day 2, we found a broken strand hiding under the tape at the port upper. He'd owned that boat 9 years and never once had a reason to look, because nobody had ever asked him to. And here is where I'll defend somebody this channel never defends. In that whole transaction, the broker, the seller, the yard, the lender, there are exactly 2 people who don't get paid when you buy the boat. The surveyor and the underwriter. The broker earns his commission the day you sign. The seller's problem ends the day you sign. The underwriter's problem begins the day you sign. And his is the only money in the room that's still at risk if that mast comes down in the Gulf Stream. He isn't the villain here. He's a stranger with a calculator who will tell you something true about your sailboat that the man selling her has every reason to leave out. Read the declination letter. It's the only free advice in the deal. If that's the kind of straight talk you're not getting anywhere else, do me a favor. Tap the like button, then hit subscribe. There's another one of these coming in a few days, and every one of them is built to keep money in your pocket. Number 2 is the sailboat you can insure and can't afford to claim on. Now we're south. Florida premiums run 20 to 40% above the national average, with another 15 to 25% being talked about as reinsurance costs work their way down the chain. But the premium isn't what gets people, the deductible is. A standard all-risk deductible is 1 to 2% of hull value. The named storm deductible, the one that applies to the only loss you're genuinely afraid of, runs 2 to 10%. And in Monroe County and Miami-Dade, it sits at the top of that range. Run it on a cruising sailboat worth $80,000. An 8% named storm deductible is $6,400 out of your pocket, before the company pays a nickel. Then there's the clause with your name on it. Nearly every Florida policy requires a pre-filed hurricane haul-out plan, carried out inside 24 to 48 hours of a watch going up for your county. Miss it, and the storm claim isn't reduced. It's void. So on the worst forecast day of the year, you'll be calling a travel lift, standing in line behind every other owner in the county, holding a piece of paper that says you promised. You didn't buy protection. You bought a homework assignment with a deadline set by a hurricane. And number one, the sailboat you can insure at the dock and not for the ocean. This is the one that costs a man the entire dream, and almost nobody sees it coming, because the policy in the drawer plainly says covered. What it also says back in the pages nobody reads is navigational limits. Coastal United States, the Bahamas maybe, and only in season. Sail across that line and you aren't underinsured. You're uninsured in the one place on Earth where it counts. Going offshore means a different animal entirely. The worldwide two-crew programs the real cruisers use want the equivalent of 10 years of experience from the owner-operator, and they want it documented. Courses, licenses, logged passages, time on a sailboat like the one you're asking them to write. Some want the standing rigging under 10 years, full stop. You don't fill in a form. You make a case. A sailing resume, a maintenance log, a plan with dates on it. And you cannot buy it once you've gone because the survey has to happen before the lines come off, in a port that has a surveyor in it. Think about what that means. A man saves for 30 years for one crossing, finds the sailboat, buys her outright, and learns at 59 that the ocean checks a folder he never started keeping. The hull he could pay for. The passage wanted something he had to have been collecting all along. So what would I buy with my own money, knowing every bit of this? Not a model year and not a badge. I'd buy the folder. Give me a sailing cruiser somewhere between 15 and 25 years old, whose owner can hand me a re-rig invoice with a date on it, a survey from the last 5 years, a haul-out and bottom paint record, and receipts for the sales. That boat gets an agreed value policy, the kind that pays the number the two of you wrote down instead of a depreciated guess, and she gets it at an ordinary price from more than one company, which means for once, you're the one shopping. And I'd take her out of the box for hurricane season if the calendar allowed it, because the cheapest storm deductible in America is Latitude. If the folder's thin, that's not automatically a no. On a sound hull, it's $300 to $500 for a rigger to go up the stick and write it down. Just do that before you make the offer instead of after. Get the quote first. The number that comes back is the most honest appraisal of that sailboat anybody will ever hand you. And it costs you nothing to ask for it. Because that's the whole thing in one line. The survey tells you what she is. The insurance quote tells you what she'll be allowed to do. Next time we come at this from the other end, the 40-footers and underwriter will still happily write 20 years from now, and the ones that'll be uninsurable before you've finished paying for them. Same money on the dock today. Not remotely the same sailboat. Until then, don't let anybody hurry you into a signature. Get the quote before you make the offer, get a rigger up that mast, and make her prove she's allowed to go where you intend to take her. A good sailboat won't mind waiting out the paperwork. And when the yes finally comes back, that isn't red tape. That's a stranger with a calculator telling you the boat under your feet is fit for the ocean you've been saving for.